Good morning, everyone, and welcome back to another episode of the Crypto Morning Coffee. I got my coffee locked and loaded, ready to go, because we have to talk about what the heck is happening in the markets. After 1 week out, we are jumping straight into the charts and getting to the point here. And we have seen something extraordinary, of course, in the last week. In the Bitcoin chart, and that is that we have almost visited the 200-week moving average here with a long wick on the monthly candle to the downside, but it felt, of course, much worse than just a wick, hitting exactly $60,000 per coin. And as expected, after hitting a critical level, if we go down to the daily chart, we do see it also hitting this former support slash noisy area box here. We bounce and we have something like a counter trend rally going on, and that is exactly where I want to get in, because I think that everyone who still believes in Bitcoin, and that is not usual in the bear market that people continue to believe in Bitcoin. Every bear market there is arguments why people don't believe in Bitcoin anymore and why this is the end of Bitcoin. Just as in this bear market, right? In this bear market we also had, besides FTX collapsing and Three Arrows Capital going out of business and Terra Luna crashing above here, right? We had a series of events, but besides that, we had the same discussions as always. Like, is the adoption really going on for Bitcoin? Is it all a scam? Blah, blah, blah. The 21 million might not be the fully capped Bitcoin. All these discussions, they are coming in every bear market, right? And since we are in a bear market right now, we'll have these discussions again. One thing that I want to highlight here is I think we were, I was a little bit confused by it as well, but we were right spot on with the bear cross here, calling once more the beginning of the bear market. Of course, this is a lagging indicator, right? But once more, we almost hit this time. So the market is slightly off, right? In the sense that in this indicator, we did not hit the trend line to the T, but we came very close. And I think that's a lesson for me, at least, that sometimes these indicators don't have to hit for everything playing out in a similar way, right? I mean, we saw it also in the RSI. If you look at the monthly RSI, we were off in the cycle, and we'll talk about it a little bit later as well, right? I mean, here we were off. If you see this bull market, we overshot, but also this trend line only got established then by this bull market, right? So, and then this bull market, right? In this absolute bull market, we did see the RSI only going to 76 and being a little bit weak, just as the RSI on this rally, right? On this rally before the big rally, where we had a bear market, we came out of it, and then we had another mini bear market here, right? In before we had our mega bull market here going on. So there are a couple of things that are interesting to see still on this monthly chart, right? And I really want to hammer them home. First of all, if we say the TSI is more or less correct, even though it didn't hit it to the millimeter, this trend line, but that things are going to repeat in the same way, then first of all, we can now see a trend here, right? Or something. Actually, that's not a trend, but we can see a baseline here, right? And then we can also state, okay, after the bear cross, how many days until bullish momentum sets in, right? And here we don't have the bull cross that early, right? Until the bull run, like the parabolic run, sets in again. And if we measure that, it's quite shocking, right? Because here you spend 881 days in that scenario, right? And what I measured is, of course, from the bear market breaking down, which is here when it's officially confirmed, until the bull run starts. 881 days, right? You see this here. That doesn't mean that Bitcoin can't already go past its bottom, but that's where the explosive rally started, right? So let's check out the other one that we have, because we don't have unlimited data. But if you go from the bear cross to the bull cross, it's 791 days. So about 90 days shorter than the other one. But let's just assume that these 90 days shorter, that's a given tolerance, right? And again, I'm going from, this was basically, the bear cross, by the way, was here, right? So already, where, I mean, the two lines were together, but the bear cross was basically here. And then the bull cross, the bull run starts here, right? Okay, so here it's 730, but there and thereabout. These are monthly candles, right? So now, from this bear cross that we are right now, we are only 92 days in it, right? So that would tell us that if we behave like a normal market, then we will form our bottom. No, then we will rally again in about 700 days, right? In about 700 days to rally. Okay, but that's not the only thing that matters, right? The only thing that matters, in my opinion, is how long can you buy, and that would be like the measurement. How long we have to buy would be from where we break down into the bear market, so all-time high, to the absolute bottom, right? And by the way, here in this bear market, very early on, right, from 13 to 15, it's 396 days to the bottom, right? And then from here, from that all-time high all the way down to this bottom, it's about 365 days. So it's 396, 365, so about a year, right? Then let's take this high, even though this is debatable, but to the bottom, 365 days to the T, right? And then right now, let's see how many days we've passed. This is the all-time high. So we have passed 123 days. So 365 days would be here on the 1st of October. Okay, so this pin should go to the 1st of October. There we go. And this here would be the whatever counter trend rally, right, that we are experiencing right now, and maybe this goes on for a month or so, I don't know. By the way, guys, do me a favor and smash up the like button if you enjoy the live streams. I'm trying to bring the views that I'm getting when looking at everything here together in this morning stream, and do it as interesting as possible. So if you enjoy this, then smash up the like button. Also, I hope you enjoy your coffees wherever you are tuning in from. And let me quickly welcome the Rare Hodlers. I only see one right now, but that's okay. To the stream, we have Jonas Omi here. Good morning to you, as well as we have also Patrick Bultman here, of course. Patrick Bultman, also Rare Hodler. Good morning to you. And we have the last Singurai saying awesomeness redefined. Good morning, PH from the UK. Back to business. Good morning to everyone who tuned in this early morning. So maybe last word to this. Even though this, or what I want to say with this is, right, 365 days, we are 123 days in this. Just because we rallied here doesn't mean we can't go back down right to sub 60,000 again and start to form out our bottom. It would be really weird if we form our bottom here. That would be completely out of the ordinary, right? Which means you don't have to FOMO in thinking that you missed this bottom at 60,000 when there is technically 250 days left until October to really form our bottom, right? If everything repeats as it usually does. And for sure, we will live with much, much more uncertainty until Kevin Warsh takes the Fed chair in May. And then from there, we will see how policy is going, right? A quick look at gold as well, because we see this already, right? The uncertainty meter, so to say. It's still on the rise, right? Even though it has visited its bull market support band, it's still on the rise. And to be honest, we can't really honestly define a bigger correction unless we break through the bull market support band, right? And then probably we revisit also at some point these upward sloping moving averages at some point, right? That takes time to unfold, but gold is still rallying. And as long as gold and silver has crashed quite a bit, right? But as long as gold is rallying, the rest will not, in my opinion, right? Here's silver also, right? Silver dropped to its bull market support band, and now it's coming up a bit again, right? Counter trend rally. Silver had a really, really bad drop here. So precious metals had a correction, but they can still rally on for more time, right? And that's what I'm thinking. Altcoins, absolute in the gutter, right? Now let me get to the which of course is expected, right? Altcoins across the board on the last week, another 5% down, even though that there are some altcoins that are bouncy. Although we have to see that altcoins are kind of holding okay. Let me see. Total to, how do I do this? Against BTC? Is that how it does? What is how was that again? Total to BTC like this. How was the against sign? Well, let's look at total 2 on the USDT first. So yeah, total 2 got wrecked a little bit more, but now at key support, I would say maybe. Yeah, I mean there's some confluence here, but total 2 got wrecked. So altcoins are bleeding hard. I have to find out how I can measure one against the other again. I didn't do it for like quite some time, but I wanted to show or wanted to see against BTC. Anyway, let's go into the what's going wrong, right? And that is several things are going a little bit wrong in the market. We have this no limit account here. Recession warning. The latest job openings data just dropped. It's an absolute disaster. US job openings are now at recession levels. Not only that, but we're below the level recorded during the 2001 recession. The market will react tomorrow, brace for impact. So tomorrow was, that would be today, right? So we will see. So that is interesting to know, right? For the job numbers. And then also this, right? And this is super interesting to me. So these are the commercial mortgage-backed securities delinquency rate. And this displayed from 2000 to now. So we had, basically every time we had a financial crisis, this stuff peaked before or during, right? Better, or not every time, because here in 2008 it wasn't even high, right? There the mortgage-backed securities were not commercial, but that was the housing market, right? That's how I interpret it, at least. But yeah, we do see it here, right? Financial crisis, oil bust, and now we are here, right? So 103 basis points in January to record to 12.3%. This surpasses the post 2008 financial crisis peak by 1.6%. So this would be here, right? The financial crisis hits and then boom, it happens. The CMBS delinquency rate has soared 600% over the last 3 years. Meanwhile, the delinquency rate for multifamily commercial mortgage-backed securities rose 30 basis points to 6.9%, the third highest since December 2015. The overall delinquency rate increased by 7.5%, the highest in the last 5 years. The commercial real estate crisis is in full swing. There you go. Then also this year in the crypto market. So this maybe some months back, right, in crypto at 1010, it's called 1010, right? Everyone remembers 1010 that has altcoins, right? Let's go to, for example, VeChain, right, as an altcoin. Wait, let's look at it on Binance. There we go, right? This is in almost every altcoin chart and especially on Binance, right? 58, almost 59% drop in VeChain intraday, and then bounce back in that day. So there was massive offloading, right? And people said that something might have broken, right? And we're seeing stuff like this happening now also in the crypto market again, right? Such as when we were in the last bear market when Three Arrows Capital and the stuff broke. So let's read this one here from Dan Eigenmann. It was sent a pretty in-depth report on what's driving the crypto unwind. The short version: a large non-crypto entity, likely based in Hong Kong, was running JPY carry trade, so Japanese yen carry trade funding into levered IBIT options and Binance positions and precious metals. This also explains maybe why the precious metals went down so hard. October 10, now remember that's what I showed you on the altcoin chart. October 10 blew a hole in the balance sheet. 19.16 billion in crypto liquidations, largest single day ever. Prime broker granted 90 days. Entity doubled down on PM recovery trade. Warsh nominated the Warsh nomination, so the new Fed chair, right, destroyed it. Gold minus 11%, silver minus 31%, now underwater on all legs. February 5 was the forced unwind. IBIT did 10.7 billion volume, 900 million in option premium, both all-time records. 13F filing to drop on 14th of February. We'll know who it was soon. This is interesting, right? It seems that a major entity went bust that isn't even a sole crypto entity. And they had to force liquidate their positions, right? Because of the 10-10 blowout, where also something went horribly wrong in crypto. So no clickbait title, right? Some things are just going completely out of whack, right? So we can also see this here, right? This was the highest volume day on IBIT ever by a factor of 2x with the 10.7 billion. Additionally, roughly 900 million, we read about this, were traded, also highest ever for IBIT. Given these facts and the way BTC and Sol traded down in lockstep today, normally Sol trades with beta, plus the relatively lower liquidations on central finance exchanges, this leads me to believe that the nexus of the problem lies with a large IBIT holder. IBIT has become number one venue for BTC option trading. So my guess is that a hedge fund trading IBIT options is the culprit. If you look at the 13F filings for IBIT, Whale Wisdom and so on, you'll find a number of interesting names that have a majority of their fund in IBIT. In fact, there are a few in there, not naming names, that have 100% of their fund in IBIT, which likely means no cross margin. In fact, the biggest reason to set up a fund to hold a single asset would be to isolate margin, so that if the trade blew up, the brokers wouldn't have to claim to any other assets. Interestingly, most of these giant single asset funds are based in Hong Kong. We know that Asian traders, particularly in China, have been deeply involved in the silver gold trade. Silver was down 20% today, which was the second largest one-day move in a very long time, largest on January 30. We also know that JPY carry trade has been unwinding at an increasingly rapid pace. This leads me to think that the culprit for the IBIT blow up today was one or more Hong Kong-based non-crypto hedge funds. So that might be the explanation why the Bitcoin drop was so harsh, right? If there a major entity on IBIT got wrecked, right? That definitely could have been the reason for the sharp drop. Now it got bought up, but we will see if we can, or if we are trending down there. What will be the bottom for Bitcoin? 30 to 40K. It could be higher. I think it's probably higher, right? Going back to BTC, to the Bitstamp chart. Because if you, and this is always like the macro view is the best here for that, right? If you are getting rid of the lines, if you see the moving average, here, like the 200-week moving average, you will see over the history of Bitcoin that we went in every bear market to it. In the C crisis, we crashed through it. And then here, we underperformed it for the better part of a year, right? Almost. So under the 200-week moving average. But that was an exceptional environment. So I would say the first destination would be on and around the 50-week moving average, which for me would be 57,000. It's right now. It's going upwards, right, in the long term, even though Bitcoin is coming down. So I would say we could go like here at and around it. Maybe we fall a little bit under it. So my range would be 57 to 50,000. For that, right? And also, given that, if you focus here on the RSI, I mean, we see the RSI in the bear market usually being at around 44, right? Let's put this straight here, at around 44, right? Here it's a little bit higher. We are now in that territory, but we did not underperform this RSI towards 40, right? We've never been lower than 40. So the RSI range that I'm looking at is really this 40, 45-ish, which is this bear market, right? To 40, where we were, right? Basically a range. Let's mark this range. A range of RSI that we have seen before, right? So this would be, if you say, okay, I want to buy in this lower RSI range, then that's the bear market territory, that's the bear market territory. This technically would even have been a good buy, right? And then here we are deep down in the RSI already, right? So I would say, since we are that low of the RSI, my bear market bottom box, so to say, would be 57 to 50K. And then also we have to see that usually we are, if you take an all-time high, we are going slightly under it, okay? here's our last all-time high, right? You see this all-time high, and then in the bear market we went slightly under it, so 15,000 versus the all-time high being at 19,000 or almost 20,000, right? If we were to repeat that pattern, as things are rhyming, not repeating exactly, right? Then we would say, okay, the all-time high is $69,000 right here, and then going maybe 5k under it is 64, right? So we have been already to 60k. So I don't see much lower than that. Or if you were to say that actually this was the real top at 64k, then 5k going under it, something like that, is 59,000, right? So that would coincide with all of this, right? But I think the orientation is more towards the 200 moving average, right? Slicing maybe through it. Maybe we don't even go that low. 30,000, I don't think we will see it. I don't think it, but I could be wrong, obviously. But I don't think we will see 30 to 40k. I think it could happen though, right? And it would not be. I mean, it would then be like this bear market, like this year, where we are under, like 30% under the 200-week moving average, which would be 40k, right? Yeah, okay, that could happen. It could happen, but I wouldn't bet on it. Like, I wouldn't sit with all my money and wait for 40k, because that has caught that wrecked a lot of people here in this bear market here, where they were sitting and everyone was talking. Remember, everyone was talking in the last bear market about Bitcoin will hit 12k, and then from there maybe even go lower. But everyone was like, I'm buying at 12k. And Bitcoin turned around at 15,000-ish, 15,500 or so, formed the bottom, and never came back, right? And left everyone, like, you know the meme where people are waiting on the stairs for the plane? That's basically, yeah, people were left in the dust there. Okay, so we looked at that. Okay, so we're not going to go much into that. There are a couple of things that I want to show you. Right now, the Bitcoin interest is this is Google Trends. There you go. Blue is Bitcoin search trend, and red is gold this time. And what we can see is that the interest in Bitcoin is climbing, but gold is stealing the show, right? I mean, we are at 39 on the Bitcoin and 93 on gold, the highest ever for gold. Everyone's searching for gold. I would say that is absolute overbuying territory. Probably no one's searching for altcoins. Maybe we can put a third one in here, and that is silver. Yeah, so silver, even though gold is exploding, like, silver never had these good of value. I mean, silver had good values in 2010 also, where I think there was another spike. But I mean, people are looking for gold. The story is gold. I think at some point we will see that turn around into Bitcoin. Here, this one for Bitcoin was in November. That was when we had the all-time high, right? So also the search trends on Bitcoin didn't go as high this cycle. Thanks, PH. I'm already DCing myself into BTC. Yeah, me too. I just have weekly buys, but I'm obviously I want to be patient. Like, patience is always like rewarded at some point. Given that we probably have another 200 days or so, I will not stress it. But whenever we are coming in this 60,000 territory, I want to do an out of the ordinary DCA buy, where I buy some more sats, right? But I will not stress it. I have a good bit, like, for me, from my perspective, for my finances, good Bitcoin stack. But I will be buying a bit more as soon as I can, right? And then we have this Bitcoin rainbow price chart, the original, Bitcoin is dead, right, on this chart. I mean, the Bitcoin is dead this is the territory where everyone talks about Bitcoin is dead, and we're seeing that right now. So it's very accurate. The funny thing is, we never came into any higher territories here in this bull run, right? We didn't come anywhere close to. We only came to accumulate, and then we went back down, right? And the question is, it's going to be interesting to see if we will, and this is probably where everyone gets caught off guard, if we will see always diminishing returns here, or if we will actually see another overheated one. I think we will at some point see another overheated one where people will completely freak out about the performance of Bitcoin. This is the new rainbow chart where they adapted it. And even here it's in buy. There's only so much more, a little bit more on fire sale, right? I mean, this is not like best investment and so on. I like more the power of law to look at, because here, like, I mean, this doesn't have to be adjusted to be right, okay? So the power of law bottom right now would be 53, which is just in line what I told you right now of the bands, right? The power of law says, hey, we are at 71,000. The fair value is at 150,000, so that's roughly 100%. And then the upper reach that we didn't see since basically 8 years, the upper band would be 533,000. The absolute support band, and it's moving higher, is 53,000. So for me, looking at power of law here, we are absolute in buy territory. Even with the 70,000, we are in purchase territory. The more it goes towards 53,000, the better the buys, in my opinion. But in the end, it will not really matter, right? Because if you go out here this line to 2030, based on power of law, the support band is at 130,000. Sorry, that's 29. So in 30, it's 177,000, fair value 500,000, and 1.5 million upper band, right? There you can also see that very likely the predictions of that Bitcoin will be 1.5 million by 2030 are very likely bullshit, because you need to reach the upper band exactly to the T to have this 1.5 million, which means you have to have a bull run like this in 2030 on this power of law band, right? I mean, also the power of law could technically breach, in my opinion. Like, this model is not perfect, but it's valid so far. And I think the reason for that is, if you would print the US dollar, because this is measured against US dollar, if you would print US dollar into oblivion and create a hyperinflation where a loaf of bread costs $1 million at the counter, then probably Bitcoin will just smash through the upper band and go parabolic out of this power of law, right? I mean, you can always print it out of this in no time, right? And maybe that's also the reason why we're underperforming this fair value band, because we have been in a contracting environment at the moment, but they will print at some point, and then they will print it to the upper bands, right? Basically, I mean, Bitcoin is a measuring stick for debasement, and maybe they haven't debased that much in these last years, plus this contracting environment where people don't have money to put it in the anti-debasement, and with lower inflation rate, official inflation rate, and everyone believing in it, probably also people didn't have that much incentive to put it in something that is a store of value. Now, the counter thesis to this is, why is gold rallying then, right? Gold is rallying, in my opinion, more because central banks are loading up and front-loading what they are going to print, right? Central banks buying right now gold, they're front-loading what they're going to print. Unfortunately, I have to leave it here. Guys, make sure to smash the like button if you enjoyed this. Also, let me know in the comments below what you think about all of this and what your strategy is for buying. We will do more Crypto Morning Coffee this week to be able to cover the rest of the content that I have prepared, plus the new things, new developments in the market. But for today, I'll leave it with this. I have to jump. So wherever you are on the world, have yourselves a great morning, evening, day, night, or afternoon. Enjoy your coffees. And until the next time, have a good one and bye.